We're looking, we all remember the longer intermediate term technical picture. We were looking at a bounce out of a level 3, so all shows you very, very clearly. I believe this shows well. You can see a 1 and a 2. That 3 is very important, and this is a 5. You had a lengthy correction. And so long as it is sustained above a level 3, we expect that the market is bullish, especially if you're seeing higher intermediate term positive momentum. And we are seeing higher intermediate term positive momentum on the 4 hours and, of course, on the day. So the bounce comes in as even higher than that level 3. That level 3 is actually 2,590, and you can even get 2,580. But the market, this market just did, I believe we don't really, we need these. This market just did 2,606. We were looking at this correction for the past few days. We believe we've done a 4A, we've done a 4B. I have highlighted what will compromise a 4C and A, B, and the C. We were looking at this yesterday, remember, and we were able to segregate it into a 1 and a 2. A 3 at this point. This is an ending leading diagonal, a 4 and a 5. And that 5 has an internal 3 and another 5 that did the leading diagonal. And now the market is breaking out. We have a trigger, we believe we have a trigger on the 15 minutes. This does count as a trigger. We're above the moving average, all right? And more importantly, we, I believe, are at a specific resistance on the hourly frames. Let's check this. Today we are at the pivot level on the 15 minutes, but more important, where are we on the hourly time frames? Hourly volatility levels. Just take this first to 1 hour. We don't yet have positive momentum on the 1 hour, but we are at support 2. That's just what we want to see. We are at support 2. So why does this give us more confidence to take the trade? Because we were just saying you could still go down to 2,582, that level here. But if we're seeing positive internal momentum and we are at a support 2 bounce on the hourly time frame, this usually is the utmost volatility level for the week, especially if we are close to the end of the week. And if there are no more fundamental releases expected, there is, of course, a fundamental release tomorrow regarding the PPI. But if the market has already reacted in a positive reaction towards gold prices after the CPI, it will be even more positive after the PPI, because we're seeing a stronger CPI. So you are going to see a stronger PPI. Even if you don't see a stronger PPI, it means that today's reading is going to feed further into the future into a stronger PPI. It will be discounted as a stronger PPI. And therefore, we should be seeing, that's why the market should bounce in gold. Give also take into more consideration that we may be seeing weaker employment if today's unemployment number, let's say, has implications in the NFP number that is going to be released early next month. It will mean that we're going to have less employment. Less employment will mean that Federal Reserve will have to reduce rates quicker. And of course, there will be lesser yields, and this will drive up the price of gold. So we're looking at a bounce. There is also the possibility of geopolitical escalations that are always there hanging in the air and haven't yet broken out. All right, so we are at the right level of the bounce. Let's now check higher degree momentum to make sure that we're well supported. We have contained negative momentum on the 4 hours, so we really are in a 4C. But I believe the day and the week, the daily in particular, is still positive, so we shouldn't have any concerns. The day is very positive and above overbought. Let's take this back to 15 now minutes. Round up the labels. Bear with us a few moments. We should be doing, I was saying we should be doing a momentum segregation, but we'll just use a visual segregation because the momentum here has proved that there is reversal because of the positive trigger on the 15 minutes. The positive trigger on the 15 minutes will mean you're seeing already positive triggers on the 5 minutes and on probably the micro frames. So we've had, at least initially, we believe we've had the 1 and the 2 at this point. There's a 3, there's a 4. And we have had 5 swings into C. We can of course subdivide this into an internal B and an internal C between that leg 1 or this leg 1, or even here, A, B, and C. There's an A, internal A and a B, and then we had another 3 swing into this 5. There's another 5 swing into C. But we'll just keep it at this. We don't really need the internals. We can see here we have an Elliott structure, 1 and a 2, 3, 4, very complicated, and a 5. So this appears to be our growth wave. We believe we have a leg 1 at that point, and now we have a dot 1 and a dot 2. And accordingly, we are seeing this. You don't need these for at that strength anymore. Don't even need them. We have a neckline right there, actually right there, right? And at this point, we have a 1 and a 2, then a dot 1 and a dot 2, and we'd want to have these all showing so that we know where to place our stops now. You have a bit of negative momentum here, is where you mark like 1 and 2. Could be 2A, 2B, and 2C at this point, or just the 2. Where you have that indentation is we have a dot 1 and a dot 2. So it becomes a bit simple to trade, and also we don't have to be bogged down into the position. Even if we think we have a reversal and a confirmation, if you don't want to be bogged down to the position, you just buy resistance 2. Resistance 2 today, if you break above resistance 2, the market is trending. Resistance 2 is 2,630. If we are not on the market, of course, in the first place. If we are already in the market in the first place, I believe we have a hedge at 2,630. We have a hedge to the downside at 2,630, and we have a long at 2,650. So we will hold the long, we will close out the hedge we'll close out the short right now so that we are in the money. We have a hedge, I believe that was 2,630, not that high. We must have moved the arrows. We were usually hedged below level A, so that is 2,630. We should close, this is, the hedge is a short here. We should close the short, hold on to the longs. If you wanted, we hold on to the longs going into the end of the week, going into the PPI tomorrow. We expect we're going to be looking at the target levels very shortly, but we expect we are going to see at least the market high or close to the market high, 2,690 again. The market high is 2,689. All right. From what you're seeing, we shouldn't fall below level 1. We shouldn't fall below 2,616. If this is correct and the breakout is correct, we shouldn't really fall below. We can have a long tail candle, but still end up at the neckline. And the longer it takes, the more probable that we have a reversal. Because time, the market will discount that the market has been stable for a lengthy time above 2,620 or at around 2,620. And therefore, this in its own is a confirmation of upward move that is about to ensue in the market. So the longer we stay at that level, the more bullish we will actually have a market reversal. At least that's our take on it. Unless we break level 1 immediately, that's when we can consider we have a failure and there's no need to join into the longs. Meaning that within the current hour, I should see the market break level 1 and go to 2,600 and just 2,600, 2,685, you know. If we get to these levels, yes, we are getting another deeper correction, and C is not finished. And we have rejected the level 3. We have rejected that level here, so. And we're still in the correction. But we should have the retraction in 1 hour time, 1.5 hour time at the most. If we hang there, we haven't taken out a level 3. We should take out level 3 if we are going to be trending. If we just stay put at that level, it means more likely for the longer we wait, it means more likely that we're going to get a reversal to the upside. All right, let's check the internals now. So the best, in order not to be bogged down into a position, caught in the position, be on the good side of the position, only when the position is moving, is to buy using a buy stop on a breakout above resistance 2. Resistance 2 is 2,628, 2,600 and just 28, 2,630. It's at the neckline. It's below level 3, I know, but if we get that high, we have supported the 200-point moving average, and that is for us enough. We can take the long if we're still, of course, fresh into the market, and we can have a hedge at 2,600 below the market bottom. Let's take it now to the internals, 5 minutes and 15. Do we have a trade on the 5? Not really. We don't yet have a trade on the 5, but we can see we are having a strong Elliott structure. It's like an internal 1 and a 2 here at this point. And all this is a 3. There's a 1 and a 2, 3, 4, and a 5. And we are 50% into the rise. Let's take a look at the micros, 3 and 2. We're not getting negative momentum at this point. We're even getting attempt to round up higher, and let's take it to the 2. The same is showing there. Let's check intermediate term. If momentum is contained, we're looking at now momentum attempting to become contained in the 45 minutes. We had a cycle extreme on the 45 minutes at this point, minus 372, which means that what the rest of the market action after the cycle extreme was just a leg 5. Like we labeled it here, leg 5 in red and a leg C. So you may consider, someone here asks, I mean, we could have done a lot of money trading gold to the downside. There's been a long consolidation, and it was a good consolidation. We could made money on it. Technically, looking at shots, yes. But if, in reality, if you're trading gold and you're shorting gold. Fundamentally speaking, usually when I personally do this, it's not just about the technical aspect, it's about the fundamental aspect, because gold can reverse suddenly very quickly to the upside fundamentally, and you are caught in a very severe drawdown that will take a long time to get out of. You can even burn accounts. So it's my personal bias. I do not short gold if the general fundamentals are against shorting it. It only short gold if, yes, we have a very strong stock market, but if the general economic global conditions are robust, are strong, we have a different economic growth projections, then we can short gold and make money. But in the current environment, shorting gold is very risky actually, because you never know when there's going to be a sudden reversal based on a fundamental geopolitical impact. All right, so like we were saying earlier, we had the leg 5 here, we had the cycle extreme, we had the leg 5. Looks like we're even getting a good candle structure. A bit of a strong candle on the 45 minutes would also show on the 1 hour. Same structure on the 1 hour. On the 2 hours. And we are beginning to get attempt to support above oversold on the 2 hours. Let's take it now to targets. The most probable, like I was saying earlier, is resistance 1, 2673, or the old market high. The old market high registered here is 2677. I believe we registered 2689. So this is probably will be showing on the minutes candles. It's just spot value. Resistance 2 is 2700. In order to see resistance 2, I believe we need a geopolitical impact or catalyst to spur the price of gold higher. Ultimately, when we get that impact, everybody knows, of course, what we're waiting for. But we have had reports of attempts to have a ceasefire in Lebanon by the United States, but these are not really confirmed and unlikely to be approved by the right-wing government in Israel. So we're still for geopolitical pressure that would drive gold higher. Should this happen, we still have another week to go, probably maybe across the end of the week, especially with the situation between Iran and Israel. We should be seeing a breakout higher to resistance 2, which is 2720 at this point. Resistance 2, of course, is 2700, in between resistance 2 and resistance 3. I believe this is a resistance 3, 2722. So the long is, of course, viable and probably necessary to do before the end of the week. And we believe this is now the time to engage, if we are not already engaged. If we are already engaged, our long is at 2650, that green arrow here. We have a hedge at 2630. We close out the hedge. Right now market is 2620, so we should be making about $10 profit. Hold the shorts, hold the longs, and have a new hedge placed to protect our longs at 2600. Showing here 2601.